Sachs has sharply lowered India's growth targets for the current calendar year to 5.9% from previous target of 6.5%. The global brokerage firm has also upped inflation target to 4.6% from 4.2%. Now, Goldman Sachs has also forecast 50 basis point rate hike by RBI this year. My colleague Anurag Joshi joins in with all the details on this.
Goldman Sachs has cut the economic growth forecast for India in 2026 to 5.9% from 6.5% the Wall Street firm had forecast earlier. The revision comes amid concerns about the fallout of the West Asia conflict on the local economy and also on the consumer inflation in the months ahead. This also weighs, given the fact that economists globally are predicting that the conflict, and if the war continues for a longer duration, will have an impact on the global economic growth. Goldman Sachs expects 50 basis points of hike by Reserve Bank of India in 2026. In the February policy, the RBI had left its benchmark repo rate unchanged at 5.25% and kept a neutral stance. The sudden escalation in the conflict between Iran and US-Israel is expected to have an impact on fuel prices, given the blockage at the Strait of Hormuz, because of which the traffic of ships, especially crude tankers, has slowed. And there is a blockage, but the good news is that some of the Indian tankers are making their way to India, and that could alleviate some of the fuel problem in the local economy. Goldman Sachs sees the Brent crude at $80 a barrel in October-December if the Hormuz trade resumes by mid-May, and it sees it rising to $115 a barrel in October, in the same period, if the oil output in the region is hit, and at $100 a barrel in this, October-November if the supply hit is for a period of 10 weeks.